Yo, what is happening, traders? Thomas here from VAGAFX. This video, we are going to be looking at the most profitable trade that I've taken this year. It should be the most profitable of my life, but we did have to cut it short as PPI was announced yesterday afternoon. We know how volatile they can be. We're also going to go through some crazy price action on the charts at the moment. Silicon Valley Bank in America has collapsed and it is causing a bit of a ripple across the Forex markets. We're going to cover that, some of the strange price action going on with currency correlation. Without any further ado, let's get straight into it. I hope you guys enjoy. So as normal, guys, we are going to mark up significant structure levels just so we know where we are trading to, which direction or bias we are taking. Now, before I do start though, guys, I do want to say that in our strategy, we do ignore candles that occur during rollover periods. So just to let you know that we do that, just because I will be referring to it later in this video. We call them spread bars or spread candles, and we do paint them normally a different color. So we know to ignore them. Now, this is actually the price action that occurs during spread hours. You can see it's very stringy price action. Happens basically every day. And we do ignore this market just because it can cause false swings. So for example, we got a breakdown by here. This would have been normally a major swing point for us, but this occurred during spread hours. You can see that the volume is basically non-existent in the market, and this can easily happen, guys, because there's no liquidity, so the markets can move a lot quicker simply because there's nothing to stop price from moving up or down. So this is why we ignore this price action. But as normal, like I said, we're going to start marking up some significant structure points. And we can see that this is currently the lowest points of the market. We've seen this strong bearish movement. We can see that there is a major order flow reversal here. We can see that there is a major high that's been broken after major lows being broken. So the lowest point or the most extreme point becomes our swing. We're going to just mark that out in red. And we're going to follow the market back and find the last swing, guys. We can see that there is a structure reversal by here. This is clearly where the last reversal happened. We're going to move our swing low up to there. We're going to follow the market back. We can see that there is a previous significant structure point here that's been broken. And this actually did occur between a major high and a major low. So this is actually an internal swing. This would have been the last major swing low. So we can see that the market is clearly bearish, guys. You don't actually have to do this. Well, this is just for mentoring sake. We're going to expect the market to come up somewhere in here before order flow continuation. Now, we would actually be looking for a trade at this point. We did actually discuss this entry with the community. There is some liquidity by here, so we would have been looking at a more reserved entry. We're still expecting a reversal from this region or a rejection, but our stop loss and entry would have accounted for the liquidity above here, just because we know that the market can sweep like this before continuing the downside. But with all this bearish momentum and volume, guys, the market didn't actually come and tap into this imbalance. So we're going to keep playing the price. Now, this was on the Friday, guys. You can see that the volume started dropping off already. And you can actually, if you are watching this video, you'll know by now that there has been some fundamentals come into play. Silicon Valley Bank has collapsed and it's caused ripples throughout the financial world. And you can see that during the market rollover, during the weekend, we do get a giant or large gap. Now, this happens, guys, because there is trading that occurs in closed market hours by banks and large financial institutions. So although there is very low volume showing on the market by here, you know that there is going to be a large amount of volume at this region, which can obviously reject the market in the future. So just want you to focus in on this point, as we will be coming back to it multiple times now over the next few minutes. So we have this large gap by here, guys. We know that there's been some weekend trading by large banks and financial institutions. So we know that there is going to be a large amount of volume by here. We're also, like I said, going to ignore rollover price action. So we can actually see that from this point, till 11 o'clock, we are going to ignore any price action that occurs during this region, simply because of the low volume that occurs during the market. Think of this price action as simply not being there. I'm actually going to put this at the back in front of price, just so you literally can't see it. So imagine this is just one large gap, guys. We'll actually move it slightly across there. You can actually see that the market has come back into this region already. Like I said, this suggests that there is unfulfilled orders per there, and there would have been a large amount of volume for the market to actually come down and cause a gap like this. Now, I would have been asleep at this point, so I did actually miss this movement, guys. You can actually see that the market does break down. It breaks a significant structure point by here. That's another major structure reversal. And we've got all this imbalance by here, which we know that the market does have a tendency to come back and fill. So we're going to get to about 7 o'clock when I'm waking up. If you were waking up and you did want to get involved in this movement, you would have simply placed your order on the zone that's formed before all unmitigated imbalance. See, the market comes in, tags, order flow, continuation. And what we're going to do, guys, if you were in this trade, you're going to simply wait for the next swing to be produced. That's when there is another major structure reversal. We can see that there is clearly a major structure reversal by here. The lowest point then becomes the swing low. We're just going to mark that out in red for you. And this is because there was major lows being broken, followed by major highs being broken. We're going to follow the market back and look for the last major swing. Now this might be called a significant structure point to other traders, but we do call this a minor swing within our community. And that's because this is happening in between a major low and a major high. This is internal to major structure, and therefore it is a minor swing or a minor structure reversal, which we do actually incorporate into our strategy. We won't go into this today. We're going to keep following the market back. We can see the same thing again. There is no major highs by here. This is the last major high. This is the last major low. And this is all happening internal to that, guys. So this is a minor swing as well. We're going to keep following the market back. We can see that obviously if we're ignoring this price action, this would be the last major low. This is still the last major high. So this is a minor swing point. We're going to keep following the market back. We can actually see that this is where the last major structure reversal happens. We can see major highs being broken to the upside. And then this was the last major low that broke. So this is actually where our swing starts from, guys. We do this because it allows us to stick with the momentum of the market. Now, if you do actually go over my previous videos, you will know that we utilize something called historic zones. And these are zones that have already been mitigated once, but the market has had time to replenish orders at those levels. And these will be levels where there is imbalance, but it is mitigated imbalance. It is imbalance that's already been mitigated. We do have rules and exceptions on how many times this can be mitigated. Obviously, the more mitigations, the more orders are fulfilled at those levels, the less likely there is going to be orders there to reject the market at a later point. But if you do only get one mitigation, then you know that there is likely still going to be orders at that price level. So if we look for our historic zone, it would be this zone by here. It's already been mitigated only once, and we know that this is where the gap originated from, so we know that it is going to be considerably higher volume than what is normal of a Friday rollover period. We're going to pull the zone across, and we are going to place an order at this price level. Now, depending on your risk tolerance, guys, especially with this liquidity that is going to be present above, you can have your stop loss above. I personally was very happy with this zone just because of the gap that it caused. I had my stop loss set on the swing itself. Now, as normal, guys, you are going to be targeting the pro momentum swing. This is the counter momentum swing. We know the momentum is bearish. we are expecting the swing low to be broken and the order flow to continue. We did actually have PPI news coming out the next day during lunchtime, so I did actually close this trade out early. You'll see that we did actually return a very large profit. It's the largest profit I've had all year. You can already see liquidity building below, guys, so this is just confirming to us that the market is more likely to move to the downside rather than the upside. Now, before I did actually enter into this trade and place it, I did actually spot this liquidity by here, and if you actually draw this up, it does line literally perfectly. You've got 3 perfect taps on this diagonal liquidity line. And this gave me more confidence in the setup at hand as well. Now, obviously, it is always wise to take partials, guys. So you would have looked to take partials at this significant structure points by here. I do normally say to divide it into multiples of either 2 or 3. But as we do know that the swing low is normally likely to get taken, or the pro momentum swing, even 2 can be a good idea. We can see that the market does actually come and take out the swing low. Now, this would have actually been a huge 20-yard trade. So you can actually see that here, I did actually post the entry or the zone itself. We did actually get a rejection here, which is before I actually did place my entry. You can actually see that the market does actually come up into the zone for a second entry. I do post the profits as well. So this was whilst the trade was running. Got 2 funded accounts. This was on my 200k account. We did secure 20 grand, and on my 100k we secured obviously half of that. So I did actually get, sorry, so 2 of these trades. This was actually a trade from the day before. Well, I placed it the day before it actually, the position actually closed in the morning. So we did actually, it was actually my most profitable day of the year. We did actually get around 14k on my higher account and around 7k on my smaller account. You can actually see it, like I said, I did close it early. We would have secured nearly double that if I did let it run the full length. We do go into our UJ channel. You can see that one of the students had already marked this this price level up, so he got involved at the same level as me. You can see that he's actually marked zones on these minor swing points, and we do utilize these with more defensive setups as opposed to aggressive entries from these larger swing zones. You can also see 2 other of my students get involved. They did get involved at the second entry at a bit more of a more advantageous region. And you can see Sven's also accounted for liquidity above with his stop loss.